This indicator performs exceptionally well in a trending market, and all these trades would have been profitable if you had entered based on its entry signals. However, to maximize its effectiveness, it's essential to combine it with a trend filter. Let me ask, what do you prefer to use as a trend filter? A moving average, trend line, or maybe some fancy indicator? And how you deal with multiple price crossovers during sideways market? For me, the answer is obvious. I use a ribbon instead of a single moving average, usually the EMA ribbon. The goal is to enter during a pullback at the most advantageous price. Using a ribbon, you can gain a clearer understanding of the trend compared to a single moving average. This is because during a pullback, the price may cross a single moving average several times, which can be confusing. On the other hand, a ribbon consists of various period moving averages, creating a cluster of support and resistance levels. This helps you assess the strength or weakness of the trend more effectively. The one we're going to be using for our today's strategy is called RK's 07 Moving Average Ribbon by Rodrigo Kazuma. All indicator links and settings will be in the description for this video, as well as the time codes for each section. This script is a modified version of the Momentum Adjusted Moving Average, or MAMA, by DGT. It's calculated using momentum, acceleration, and probability, providing quicker responses compared to a regular moving average. Let's make some minor changes in setting for the strategy. There are several variables you can customize in the settings, such as choosing different moving averages, acceleration multiplier, or momentum length. However, for our purposes, we will leave this at the default, which is the EMA. Instead, let's adjust the periods as shown on the screen to reduce noise. There are also 8 color schemes to choose from. Kudos to the author for providing this variety. So when the ribbon is green, it indicates an uptrend, and we will only consider taking long positions. In a downtrend, when it turns purple-pinkish, we will focus on short positions. As you can see, during a trending market, you can make excellent entries by following the signals provided by another indicator I'm introducing today called Extreme Trend by Kakrastox. This script is derived from Half Trend and has been customized. Notably, it doesn't repaint, and its signals are generated through a distinct logic as stated by the author. Let's quickly get through the settings. Oh, there's basically no settings you can change, so we'll only change the Extreme Trend color from blue to white for better visibility. For optimal entries, we need to pay attention to the RK-7 ribbon. Notice the part of the ribbon that expands over the candles when the price has been moving in the same direction for a while. This signals that the price is approaching overbought or oversold, depending on its direction. The best time to buy is during a pullback. However, price is below this cloud during the pullback, it indicates that it might not be the best time to enter. This is because the momentum has temporarily shifted against us, and we may not capture a significant move by entering against it. Now that I've explained how the ribbon works, pay attention to this. The Extreme Trend indicator provides the best long entry signals when the ribbon is green, and the candle closes outside of it when the indicator signals to enter. Conversely, it's best for short entries when the ribbon is purple-pinkish and the indicator is flashing. However, avoid taking trades if the price is still inside the ribbon when buy or sell signal is given. Before you ask, this strategy can be applied to any time frame. For optimal entries, buy when the ribbon is green and the candle closes outside of it at the time of the signal. Look for a purple-pinkish ribbon and the flashing sell signal from the Extreme Trend indicator. Pay attention to the ribbon's behavior, particularly the part that extends over the candles, indicating the price's prolonged movement in one direction and getting overbought or oversold. If the price is below this cloud during a pullback, consider that it might not be the best time to enter. This suggests that the momentum has temporarily shifted against you, and entering against it may not yield a substantial move. For this particular strategy, I'd suggest placing a safety stop loss just below or above the entry signal given by the Extreme Trend indicator depending on the trade direction. Exit when the opposite signal appears. Although this method has yielded the best results, it requires constant trade monitoring. If you prefer a set and forget approach, a classic 1-to-2 risk-reward ratio is suitable for pullback trading, and a 1-to-3 ratio is even better for the break and retest option. A recommended stop-loss placement is below the recent low or above the high, depending on the trade direction. The RK7 ribbon is a simple yet powerful tool that helps define the prevailing trend direction. When combined with the extreme trend indicator, it forms a reliable and effective combination. If you're interested in a multi-time frame approach, I recently reviewed another strong strategy, which you can access here right now.